All right, well, let's get started. Hello, everyone, and thank you very much for joining us today. We have a wonderful group of panelists ready to discuss and hopefully debate an important topic, and that is the proper role of government in providing funding for technology startup ventures. Not only each of the esteemed panelists today is an active investor in MENA startup ecosystem, but each one of them also has been involved one way or another in collaboration programs between government agencies on the other hand, and venture capital firms and technology startups on the other hand. So I look forward to hearing about some of the lessons that each of you have learned from these collaboration efforts. But let me start briefly by introducing myself and QRDI, the organization that I am representing today. My name is Maher Hakim, and I'm the Chief Advisor for Innovation at Qatar Research Development and Innovation Council. Concurrently, I'm a Professor of Entrepreneurship at Carnegie Mellon University in Qatar, and also a partner at 212 VC, which is a venture capital firm investing in tech startups in Turkey, MENA, and emerging Europe. QRDI, which stands for Qatar Research Development and Innovation, was created in 2018 with a mandate of assisting in the creation of a knowledge-based economy in Qatar. And we do so through the support of both scientific research and R&D-based innovation, not only in academia and government, but more importantly, within the private sector. QRDI programs include incentives for businesses to develop and deploy new technologies and R&D-based products and services, grants for scientific research, as well as educational scholarships in various STEM fields of studies. Let me now turn my attention to our wonderful panelists. And I would like to ask each of you to briefly introduce yourself and your organization, and perhaps to kickstart the discussion, if you can share with us one important insight, some words of wisdom, which you have acquired regarding the topic of the discussion today. And that is the role of government in funding startups. So perhaps we can start with you, Sara, and then move to Asher, and then Ibrahim and Shehab. Sara?
Yes. Hello, everybody. Thank you for having me today. I'm very happy to be part of this panel and to talk about my experience in building emerging entrepreneurial ecosystems. So I've been working with SMEs and startups for the past 15 years. I started my career working with them as a consultant and advisor, as a part of support services to help startups grow. And then a couple of years down the line, I switched as more the investor role. So I joined a venture capital company based out of Beirut that had two headquarters, one in Beirut and one in Paris, and that focused on funding technology startups from Series A to Series B. And then I've been moved to Doha. It's been 6 years that I'm here now. And in the past year and a half, I've been managing Doha Tech Angels, which is an angel seed investment club out of Qatar that invests in early stage disruptive technologies anywhere in the world. So that's a little bit about my background. Maher, as you said, that for me to share a bit of insights, I wasn't expecting that in my introduction, but I think that throughout those 15 years, I've realized the importance of governments in their role in helping, in their role in funding the early stage startups. So I think that the idea that I wanted to share is that I really believe that governments have an important role to play as a lender of first resort. And so in creating that credibility in the asset class of venture capital. And then we can talk about that in more detail throughout the panel.
Very good.
Thank you.
Thank you, Sara. Asher?
Hi, my name is Asher Siddiqui. Great to be here. So I'm a general partner at Sukna Ventures. Sukna Ventures is a MENA-focused fund, early stage fund. And I'll tell you a little bit about my career and how I ended up here. So I've had three phases of my career. I've been in the professional sphere for about 25 years. I started out for the first 8 years. I was an entrepreneur. In the US, in UK, and then eventually in the MENA region. I then switched and I spent 10 years in corporate M&A and corp dev and corporate venture capital. as head of M&A at Etisalat Group. And head of corp dev at Etisalat Group. And then the last 7 years, I have been a VC. So when I left Etisalat, I joined 500 startups in the Bay Area, and I was one of the managing partners of the firm globally. A couple of years ago, I came back to the region, and that's when I launched Sukna Ventures. In terms of my insights, I mean, I was thinking about this, and I realized that I had my numbers wrong when I was thinking about my career, because I've clearly 25 years, so I've been around for a while. What's interesting is I've actually had a 20-year period where I've been involved in developing the ecosystem in the region, because I came here working with the MIT Entrepreneurship Center in the UAE, working with them as a counterparty about 20 years ago. And we realized the ecosystem wasn't ready. I think there's a couple of things. One of the things that I used to hear about the ecosystem at the time was like, we don't have the talent. I always disagreed with that. I think the talent was always there. The problem was that the government support wasn't there and the capital wasn't there. And, when the government started to, sort of create an ecosystem and provide capital and support, then all of a sudden you started to see this flow of talent that exists, but, moving from public sector to sort of private sector or entrepreneurial. So I think that the government has a crucial role in developing the ecosystem. I actually think that the government is an ecosystem facilitator, ecosystem builder, but I think they should be careful in terms of being an active participant in the ecosystem, because I think that then that may constitute maybe not the most healthiest sort of ecosystem. Sorry, I think I'm going on, and I think we'll have a lot of debate there. So I'll pass over to my other panelists. Thanks.
Thank you, Ashar. We'll definitely talk more about this insight that you have. Ibrahim?
Yes, thank you, Dr. Maher. Thank you, everyone, for having me. It's a pleasure. I am Ibrahim Hassan. Currently, I'm the CFO of QDB. I also continue to be the investment officer overlooking the investment portfolio. The short story of my career is I started my career as a boring accountant. I ran away after 2 years only to lending, and then ran to investment, VC, spent a few years there just to find myself landing back at being a boring accountant. So a couple of years back, I had to again take over finance. Now, during my investment, and I think that's the most relevant, which I have been supporting the VC investment arm of QDB for the past 8 years or so. That's since I've taken over control. We've done a lot of seed investment, and that links. I don't think there will be much of debate. It will be maybe more of agreements of the delicate role that the government has to play and how careful they need to be between being a participant and being an enabler. And I don't think, I would love to think that we'll all agree that an enabler is required and a participant is sometimes required. And it's just being careful on when to be there. So at QDB, we have many pillars that we try to support, be it knowledge, support, government agenda, and others. But I think the most relevant is finance. So access to finance is one of the most important pillars QDB tries to push for, be it private equity and venture capital investment, or be it lending. Historically, it's been lending, and for the past 10 or so years, we've picked up with incubation, investment. We've taken LP positions in some funds in order to enable them to then invest in companies. So we've done a little bit of both direct and indirect, but it's all aiming at the same direction. And I think my main comment on funding is that ultimately it should be everyone's job. So everyone should participate in funding one way or another, government, family businesses, and private sector. I'll leave it for the next panelist.
Thank you, Ibrahim. So last but not least, Shehab.
Thank you. My background is I have a PhD in what would we call today fintech, which was not at that time fintech. I worked for a while across Silicon Valley in Egypt and Germany with 2 startups in the fintech space. And then I went back to Egypt, where I became very active with the government and the World Bank in the beginning to kick off in 2012 the first government-based venture capital program, which was supported by the bank. And then I had the the opportunity and privilege to move to the government as Deputy Minister for Investment for 4 years. And during that time, I was able to work with a team on developing entrepreneurial ecosystem program for Egypt, which was mainly a 4-pillar program where we focused first on awareness across the whole country, because awareness at that time was very important. We talk about 2013 and 14 and upwards, and then also providing access to finance through seeding a first government-backed VC, and then also investing through that government-backed VC into multiple accelerators and also startups. The core objective here is and remains to act as a catalyst, as a seed investor or co-investor with the private sector, and not to be the big portion of the investments in either funds or in startups direct. I left the government 4 years ago and started 2 years ago with other partners, my own fund, which is Camel Ventures, which is a venture debt and early stage equity fund focusing on Egypt.
Thank you, Shehab. Well, wonderful panelists. I look forward to our conversation. Let me start by sort of setting the stage. So there's some really wonderful news that have been happening here in the MENA region. Recently, over the past maybe 2, 3, 5 years, like almost hardly a week goes by without hearing about some startup in some country that is receiving investments from a fund outside that country, right? So you hear about Egyptian startups getting investments from Europe, UAE startups getting investments from Europe, sometimes from the US, and certainly from each other countries. So there's UAE ventures capitalists investing in Jordan and Egypt. And this is really a testament to the fact that the ecosystem is maturing and startups within a country are starting to attract foreign venture capitals from outside their countries. And this is happening in MENA, but also is happening globally. And it's, because probably there's an abundance of capital, the venture capital industry is becoming more and more competitive. So people start to look beyond their borders, for deal flow and things like that. So sort of the rise of VCs without borders. So my question is, with this kind of transactions becoming more and more commonplace, is a local VC industry, and what I mean by local is within a country, is it still as relevant and important today as it was 5 years or 10 years ago? And maybe I'll start with you, Shehab, because recently a lot of Egyptian startups have been receiving interest from outside Egypt. So do you still feel that having a strong within country venture capital industry is still important and is still relevant?
A very good question, Maher. I think yes, it's still very relevant, and I give you a very good example in tough times like macroeconomic conditions and changes which exist. You have sometimes to rely on local capital, because if some of your core VC investors who are looking into the markets start to get cold feet or want to wait and see, you have to have a strong local ecosystem which is able to support and invest, and to give confidence also to the market and to the other regional and global players. So we always see the story, even when VCs come from abroad to invest in Egypt or in other markets, they always ask who's our local lead or who's the co-investor from Egypt and so on, because you need someone close to the market, understanding the market, the regulatory environment, and also willing to take this first step in terms of risk. Is it by a public or private investor? It's a very relevant point. From a return perspective, of course, we see going regional or global might make more sense, because you get more exposure to other markets. but still, we had just a meeting yesterday with 3-4 other local VCs, and we saw we have to give confidence to the regional players, to the global players, that we are still investing and we want them to come in and co-invest with us.
Ashar, do you share?
Yeah, I generally share that. So, I think people forget that, venture capital is a people business, not a technology business. So, the number of times you see early stage founders from the US or from Silicon Valley coming to the MENA region at the early stage and saying, hey, we want to invest here. But if you go and you talk to the local Silicon Valley ecosystems there, you'll hear that, these people haven't been able to raise because of whatever reason, right? And it's the same thing here. So, I think it makes sense for an investor to know the people and so invest in the early investors in the ecosystem. The other thing I just want to say is I don't think it's a replacement. I think it's a positive thing. So, when we think about venture capital as a percentage of GDP, it's very, very, very low in this region right now, given the amount of capital we have. So the fact that, foreign VCs are coming to the region is a good thing. And all the local VCs tend to be very accommodating and help them sort of co-invest. So it helps because it's increasing the amount of capital available in the region. So that's obviously positive, and hopefully that will then lead to more support from a capital side in the region.
Ibrahim and Sara, maybe you have something to add?
Just that I completely agree. I think that there's a play for local funders, especially in the early stage. I think it will always be a local play, even if you have VCs from the region or global that are entering. That part of the spectrum, the early stage, is always going to be a local play. That's about it.
I think you know my opinion, Dr. Maher, and I don't want to take long since we seem to all be in agreement. But yes, I think if you're not there, you're not there. I think especially in early stage, people should have foot on the ground. They should be there. They should be part of the ecosystem. It also would make more sense for early stage, because at later stage, it also helps attracting other investors from the region when they know that someone who is in that ecosystem is backing up this company. It gives comfort and it helps. So I think, like Ashar was saying, it actually complements each other and not contradict each other.
Okay, very good. So this is, now that we've established that you all have secure jobs, that foreign VCs are not coming after you. And now that we've established that a local VC industry is always going to be important regardless. So what you're basically saying is, this is not just a trend. This is just on it because it's a people-based industry, and because foreign VCs will always rely on a local partner. And hence, the non-existence of a local partner is an issue, right? So, having a very strong within country VC industry is not only important to provide capital towards the local market, but also to attract capital from the outside. So foreign investors are not going to come in and invest in a local startup if they can't have a partner who is a strong local VC partner in that country. So now that we've agreed on that, the question is, okay, so, what can government do? So how does government actually support the creation, the flow of capital from foreign VCs, the creation of local VCs? You guys have all been involved with programs across the board in various countries in the MENA region. What is working and what is not working? And maybe I'll start with you, Ashar, since you've been involved recently both in the UAE and Saudi Arabia. What have you seen work and what have you seen not work?
This is a very long topic, so maybe I'll pick. I can go on for ages, but I'll talk about what I see working, because I've never been more excited about the ecosystem in the MENA region. So what I see working is access to capital in a structured format. So, for example, my experience, in Saudi Arabia, has been is that, as an emerging fund manager, you don't need backdoors anymore. You go through the front door, you apply, you go through a program, you are screened out. As a fund manager, I'm talking about, you're screened out. They do proper institutional due diligence, and you're then, you either win, you get capital or not. And the process is actually very, very good. And so I think that my experience with SVC and Jeddah has been is that these are serious institutional fund of funds, and they're doing things the right way, which is, anyone can apply at the front door and go through the process. That's been great, and I think what that has led to is a lot of capital, a lot of new funds coming out. I think there's a couple of things, and similarly in the US, I think maybe. I think the UAE is not there isn't as many incubated funds here. It's more of a natural environment. It's a natural incubator as opposed to a government incubator, in my humble opinion. I think that a couple of things that I feel. One, there's this feeling amongst the capital allocators in the region that we've done enough, and that's enough. Early stage venture fund managers. I mean, I'm an early stage, pre-seed, seed stage fund manager, and I can tell you, I want more competition, and I want more fund managers at my level and follow on. So I think that there is this feeling that enough is done, but I feel actually more needs to be done. The other thing is where I think that in Saudi Arabia, again, I'm seeing more of this happen where I'm not seeing it in the rest of the region, is that, like, for example, with my LPs at least, they've actually started to slow down on and raise the bar on early fund managers. And now what they're doing is they're actually spending more time with growth equity and private equity funds. I think that's fantastic, because I think there needs to be more growth equity, private equity, because there's only a few handful of established funds we have in the region that have the capacity now to raise big funds and go from, Series A, a seed to Series B. But we don't have specialist people that can actually invest and come in at Series B. And this is a problem not just in the region. We shouldn't feel bad. This is a problem that you have in Europe. So at Series B, it's Death Valley. And it's very hard to find a lead to take your Series B. Typically what will happen is rounds get done, but you have, it's fragmented. It's 10 different people coming together, family offices, groups, sovereign wealth funds. And so that is sort of a bit of a challenge maybe in the region. I don't know if I answered your question, but
yeah, let me maybe go to Ibrahim and do you, I don't know, I think what Asher is saying is there is a lot of work that has been done on supporting early stage funds, which makes sense, because Sara said in her answer a few minutes ago that supporting early stage company is as important. So the question is, should also the government be looking at the entire spectrum? Should the government be supporting funds across all of the different funding cycles, including private equity funds?
The short answer is yes, Dr. Maher, at least from my view. But the long another version of the short answer is that I think as companies mature, the role of government continues to be there, but it fades away. So the more mature the companies are and the more mature the ecosystem are, the less government intervention is needed. Now I speak for Qatar specifically, and maybe I speak for the region. Most of the startup ecosystem is still in early stage. And that's where we have seen the government's focus on early stage funds, and that's where they need to be focusing. But all governments should also from day one be thinking not only about private equity and late stage funds, but I think governments should also be thinking about exits. So government should be enabling IPOs and thinking of how M&A will be more flexible to be enabled. But as I said, in early stage, I think if I put this in short words, I think in early stage, if we put two circles that government intervention is needed, one of them is funding and one of them is regulatory support. I think as we move down the spectrum, funding is the one that fades away. So government is not expected to put as much funding, be it in LP position mostly or in supporting some strategic sectors through grants or through seed or pre-seed or others. So that fades away as companies grow, but the need for private equity funds is still there, and governments should try to attract them. And the need of potential acquirers, not necessarily, because when you talk about acquirers, they don't have to necessarily be within the same ecosystem, but from neighboring countries or international acquirers. There should be clear regulatory support and framework for that, and there should also be regulatory support for IPOing.
Thank you, Ibrahim. Maybe I'll move to you, Shehab, then. So what I'm hearing is that, a proper government intervention is to design programs that over time, they will not be needed, right? So it's basically government should figure out a way to create and enable, but then put itself out of job, at least the agency that's carrying that mission. How does that practically work?
It's very tough, but to summarize, I think the government has three core elements they have to do. One is creating the overall awareness and attracting the startup ecosystem entrepreneurship, both to government entities and to the private sector on a domestic and regional and on a global level. And the second element is to go in on early stages, mainly in the pre-seed, ideation, seed stage, and so on, to be a core anchor here. And we see a lot of public entities, even public banks, and so on, trying to play that role. But to pass on, as Ibrahim mentioned, more and more over time, across stages, the floor to more enablers and private sector players, because especially if we talk about local government VC backed funds and so on, there is always a natural bias to grow your local companies, and here you're getting into a risk of creating a bubble. And we have seen a couple of cases which were adopted by one or two countries to go big and so on. But here it's a huge risk you face, and that's why typically you need a stamp, like we always say, from one round to another round. You should have another lead investor going in to do this valuation, to set the core terms and say what's this company worth. Here it's the same issue. If the risk we see is that if we have 4 or 5 active funds locally who are all majority funded by government entities, we fall into the risk to create a bias that our LP base is the same, and we just have to create unrealized gains to grow these companies, to make them continue to grow. So I agree with the panel that the core element as companies grow is to set the regulatory framework and to make the ecosystem and the economy attractive to attract other investors, so that these companies are able to grow, and especially also grow across one country, because companies who want to go to the Series B, typically in the size of our economies in the region, they need a regional footprint. So that's a core element. So Egypt might be a great volume-based market, having more than 100 million in population, but the GCC from a purchasing power is much more relevant from that perspective. So how to mix these kind of elements, getting into Egypt with Qatar, with Saudi, Morocco, and so on. This is the key enabler which will make them able to go and raise the Series B and beyond.
Very good point. We'll get back to the point you're making about sort of within country ecosystem growing of startups in a way that is not, it's not financially appropriate, right? So this sort of the continued funding. We'll get back to that point, but I want to come to you, Sara, because you were I think you were part of almost the first large scale MENA government intervention in terms of funding VCs. So the Central Bank of Lebanon, I know it's been over a decade ago now, set a policy by which they can create a venture capital industry in Lebanon that had some positive effects, but it didn't reach the impact that was hoped to be reached. So I'm very interested in this.
Yes. So first, before I get right to that, I think that in general, when you said, examples where governments have done well and have been successful, I think if you look at Europe, you can definitely say that governments have been successful in being an LP in several funds. And I think that actually is a true lesson for anywhere in the world. And I think in Europe, the biggest LP have been government agencies. And this is throughout the spectrum, all throughout the spectrum, from early all the way to late. So they've been, and so I think that's an example that we should be looking at. And I think in our part of the world, we're seeing that. And we're seeing successful stories there as government, as LPs. Now, when it comes to the Lebanon story, it was in August 2013, so exactly 10 years ago, where there was a circular by the central bank, which was to incentivize commercial banks to invest in startups by guaranteeing 75% of the losses and by splitting 50% of the profits. So that gave a surge of $350 million in a very small country into VC within 4 years, I think, from 2013 to 2017. And within 2 years, Lebanon was the second most active market in terms of dollar value and in terms of number of deals, right after the UAE. So it definitely had quick impact on the ecosystem. Now, as of 2019, the entire political situation and economic situation derailed. So it's difficult to say whether the 331 was a success or not. Obviously, today it did not bear any fruits. But now, if you go deep into because Deep Ventures, where I used to work, was one of the first funds out of 331. And so some things were great: the access to capital, the quick disbursements, and some of the aspects of this framework were not so successful. And I think one of them is having commercial banks become VCs. So to my initial point, I am a firm believer that there's a role for governments as LPs. I am not so sure about the role of governments as a general partner and as a VC manager. So in our cases, we had commercial banks, people that are used to sending out loans and getting guarantees, running venture capital business. And that didn't seem like the best choice. And then the second thing that was really important is that as you're designing a framework like this, there's a lot of back and forth and a lot of things that you want to change with time. And so there were lots of conditions set to get the funds that end up being counterproductive. I'm just going to share one. One of the conditions, for instance, was that the funds had to go to a Lebanese onshore entity. We were a Series B fund. So the companies that were raising from us were raising $10 million and beyond. They were not raising all the money from Lebanon. And we didn't want them to because their markets were global. It was very difficult to talk to investors from outside of Lebanon and convince them that the topco company had to be headquartered in a jurisdiction like Lebanon. And so these are things that are counterproductive. We understand the will to promote the local ecosystem and economy, but they were counterproductive. That was one example. The second example I want to say is the importance of culture, the culture of failure. As soon as a few of those startups fell through, did not make it, then there was a fear directly from the commercial banks and from the central bank, the BDL. And so every capital call was then delayed because they were worried of the first two failures that happened. And I think that created a much bigger problem because a lot of companies had term sheet signs and shareholder agreement signs, but couldn't get the money because we needed a longer process of approval on the government side. And I think so also nurturing the fact that this is an industry where 9 over 10 companies are going to fail, and it's part of the game. And it does not mean that the process is wrong or that, yeah. So I think these are the two lessons that I think I would like to share about the failures of that.
Can I jump in on that? Because I think Sara made some excellent points there, and it's something that I'm actually quite passionate about. So you asked me a question, and I was hoping to get round and then sort of dive into what really bothers me about the ecosystem. Is I think what Sara's talking about, and I think Lebanon is an amazing, excellent case study. We saw good companies fail, not because they were not good companies, because the market was so frothy that they were overvalued. There was so much capital locally that they were overvalued, and we couldn't, as a foreign outside investor, we couldn't circle that square, and that is a problem. The other thing was, as you said about having them incorporated there. This is also a big risk. To me, I think one of the things that worries me about the ecosystem across the region is that everybody talks about the ecosystem in Cairo, the ecosystem in Riyadh, in Abu Dhabi, in Dubai, in Doha, and really, when I talk to, for example, Arij at Al Waha, she has a regional perspective. I mean, they have a Bahraini, but that's not her job, right? Her job is she's an ecosystem player from the region, as opposed to, there's things that you do to develop your local ecosystem, and there are things that you do to develop the regional ecosystem. And when you develop the regional ecosystem and take a regional view, that is when you start to look like a winner. In my humble opinion, I think governments that will take a local only approach and have this very strong local approach are going to find themselves in situations that are similar to what Lebanon went through. And if you take a regional view, then I think what happens is, and I'm seeing that in Saudi Arabia, where there is I hear a lot of people thinking, oh, the Saudis are very aggressive, that they're trying to promote their own ecosystem at the expense of other ecosystems. I would disagree. Our LPs have basically been very reasonable with us, and they've been clear about what they care about. And what they care about is economic activity. So you can be anywhere, but where's your economic activity? Where are you creating jobs? Where are you getting, generating that economic activity? And when you look at it from that perspective, then it's actually easy to invest in a company, a startup in Jordan that is serving the Saudi market. And of course, they're going to, if they have a reasonable presence in Saudi, then they're going to create jobs, they're going to have a local entity, they're going to do all of the right things. So I think that is why I'm also very worried about government intervention, because what happens is, as Sara said rightly, government intervention skews that, and let the market speak, let the market decide what makes sense from a structural point of view. But yeah.
Very good. So actually, I'm now shuffling the order of my questions a little bit, because this is a topic that Shehab, you started hinting to, which is, if there, what is the risk of big failure? So, right. So what Sara was referring to is that, there's a lot of money, all of a sudden valuations went up, for companies that are good, but then they weren't able to raise more money, and therefore, good companies failed, and that failure trickled down to people tightening the belt. And you're probably seeing some of that now in Egypt. The risks, and we've talked about it before in a previous discussion, where in large countries like the US or Asia, Japan, if a company fails because there's so much money, it doesn't matter. It's a big ecosystem, they can absorb it. Today we see on the NASDAQ a lot of companies that went public are now all crashed. That doesn't affect in the long term the ecosystem. But here in the region, I think your view was these things will set us back a few years, and it's not easy to recover in a sort of an evolving ecosystem. Maybe you can comment on that.
Yes, Maher, I think we are not ready yet for big failures at all, from different perspectives. On one side, we have to understand that most of the LP base in the region is a young LP base. So it's the first, second cycles in terms of investing and going into this asset class in general. For them, when we started to talk to some LPs and telling them this company on a pre-seed stage is valued as $10 million, he said, how come they are valued at $10 million? What does this mean? What did they do? What do you mean you value these non-tangible assets and the team and so on? So there's a lot of learning which was happening in that. They started to become more and more interested, the family offices, the government, and so on, when they started to see these companies able to raise from one round to another. So they see unrealized gains happening and so on. When then big failures happen, it's a huge risk on everything, because we don't have, if we talk about the ecosystem in the region, we have a couple of hundred startups which are on the surface that everyone knows or everyone is involved in. So the percentage of failure in these companies will have a huge impact, especially if they are more advanced in their Series B and even on IPOs, like the case of a company like Swivel, which is a very tough position. So a company which went from an Egyptian story to go to the UAE story, gets the government support in Egypt, and gets the government support in the UAE, SPACing in the US, and then going from $1.4 billion now at a $5-6 million market cap. So this is of course like an eye-opener. So how can we ensure that this is not the next position like this? The risk which happened is that before such companies tanked, that they also resulted in huge valuations for ecosystem players surrounding them. So startups were able to raise during this cycle at multiples of 2 or 3 times what they actually worth. So the effect, it ripples down across a lot of companies. It has a huge risk. And this is a very core element we always have to consider. We need success stories, also startups abroad, right? So now we talk about Apple was a great startup or Facebook was a great startup and so on. But this ecosystem, so the word startup did not exist. It was a business. They're growing a business, they're growing some, and then it turned to be interesting. And then this wave happened of, let's go more into innovation, not on asset-based companies and so on. We are still very early on. So we have to take care that we bet on winners, we support winners, but actual winners, not localized stories which we want to make winners to say we are a great ecosystem, we're able to attract talent. No, we want to create sustainable businesses who are there over the next 10, 20, 30 years. That's the success story we need.
Very good point. So it's very interesting because I sort of remember when Swivel went public 1.5 years ago, 2 years ago, maybe. There's a lot of excitement. But obviously, there's the Kareem story that generated a lot of buzz and excitement and positive momentum. And then Swivel was supposed to be this other story, but then when it turned out that it's sort of, I don't want to be too harsh, but a house of cards where things fall apart, then probably the negative effect of that overweighed the positive momentum that actually enabled them to actually reach that, be on the global stage. And maybe I'll go to you, Ibrahim, because I think you're in a position at QDB, you probably feel that more than anybody else. So our ecosystem is always going to rely on sort of making sure family offices that have already traditionally invested in traditional businesses can actually become a big player in the ecosystem to support technology startups. And I suspect that family offices look up to QDB, and when QDB makes an investment in a company, that's a little bit of a signal that there is some safety, there's some, and obviously when QDB makes an investment in a tech company, there's always an acknowledgement that this may not work out. But how do you look into your role as, my question is, are you more cautious about not having big failures because of your role as sort of a role model for other investors who are not traditionally invested in tech?
I don't think it's a question of more cautious, Dr. Maher, but I think what we're more cautious about is how we're perceived. Because when QDB makes an investment or when government makes an investment, there are multiple reasons why government may support a company. And sometimes governments, for some other strategic reasons, would be looking to support a specific sector, and they will increase their risk appetite. They will take risk knowingly, willing to lose some capital in order to promote the sector. So for example, if at some point Qatar picks energy tech, which is a hot topic that's in discussion now, and decide to support it, odds are government will spray some capital. So what we are cautious about is not be perceived as a lead investor, because I don't think QDB or any other governmental entity should be perceived by the public as a lead investor. Now, historically, QDB has been, as you rightfully said, at least in Qatar. And to be honest, I think you attended our investment forum last year, or actually a few months ago, not last year. And that's when we kind of switched hats. So today we are moving to where we think when we started, because as I said, the government role is to fill a gap. Now, when private sector is shying away from something, government should step in and try to fill this gap. Of course, there are always limitations to how far the government should go, but historically, we have been trying to fill a gap because private sector was shying away. And that gap meant we were investing all the way up to round A and sometimes even round B as sole and only investor. But that led to everything you just rightfully said. We were artificially creating local success stories, which we were at some point aware of, but when you just start the industry, there were not enough startups at the time, and you wanted to also spend culture that comes at a price, and the government was willing to pay this price. Now that private sector is picking up, we're seeing more like Sara, Daniel, and others in the ecosystem, then QDB is actually switching hats to where we think is closer to the end game, which is the government role is to create deal flow. And at least at this stage, we believe in Qatar, which is not necessarily the same in every other country, incubation, pre-seed, and early seed are things that private sector still shies away from because it's still very risky. So QDB is setting investment products and practices to support this. But beyond that, QDB will be a co-investor. And the way when I say co-investor, it means someone from the private sector has to first put the term sheet, if it's a post-seed or a pre-round A, and QDB can come and co-invest, but QDB is not going to be the first to their guns. So I think we just decided to start flipping this. Now it's not gonna happen overnight. It was announced, but we're moving into that position, and we're also signaling to the market because we've always been very clear that we take more risk than a normal investor, given the circumstances, given some sectors, given some government agenda we're trying to push, and given criteria that we look at, and we're always more friendly to local founders. So there's always a reason where governments may want to be giving money that's closer to a grant, and hence it should never be seen as a lead investor that's followed by private sector.
Wonderful. So you set the stage for me for our final topic that I would like to float around to have a discussion on. And then I want to encourage the audience to post questions. I know there are a few questions already have been posted, but we'll take 2 or 3 questions at the end. But the topic of sort of direct funding for startups, right? So far we focused a lot on how government supports funds as a vehicle to create deal flow, to use your words, Ibrahim. But there are 2 other, obviously, major roles that government can play. You know, direct investor to startups, which Qatar and other countries have been doing. And I think you all share some views on that. But then the other one is the vehicle of grants, right? So a lot of mature economies, if you look at the US, you know, Singapore, Turkey, grants for R&D based innovation, grants for small businesses to build technologies, you know, particularly in areas with deep tech. I mean, I think, you know, the value of these grants probably took a backseat over the past decade, not because they didn't exist, it's because there's a flood of, you know, digital technology, you know, successful startups that have been in the news. But if you want to do something in biotech or robotics or, you know, material science and any other places, you know, it's very difficult to find an investor, even a very early stage investor, who will take on that technology development risk. And this is where government sometimes steps in, either as an investor, but also in many cases as a provider of grants. So, you know, particularly towards, you know, science and technology that come out of university campuses and things like that. So I want to float this final topic on a government role as a grant provider, a government role as a sort of an early stage investor, before we go on and start taking some questions from the audience. So I welcome anyone's participation. So just jump in and take the lead.
I can start. I think it's and we discussed this before. So I like to differentiate between 2 types of grants, and I'm happy you asked the question this way, Maher. So if it's in terms of R&D, science and technology, and really developing things which are extremely complex, strategic, and so on, where you don't find easily the first investors, I think government has a core role to play in that area, because this really needs a lot of government intervention, and there is a lot of support needed, because this is how you could develop your homegrown innovation hub in one way or another. What I've seen a lot across governments, especially with interventions of development institutions across Jordan, Egypt, and other countries, where a lot of these grant-based programs go into incubation programs, tech-enabled businesses, which is much more, there's no proof of concept in terms of either the capabilities of the team or the technical innovation in that. So it's more like a survival grant for startups. And that's what I fear from happening if it's misused or misallocated in a wrong way. So I think government have a key role, but on the same side, there should be very strong KPIs to see what kind of impact these grants had over time. And I see in Egypt, we have done a lot of grants in the technology sector, but I don't see significant impact from grants versus from investors, especially from private investors or lead investors.
So I agree with part, but I actually disagree with part of what Shehab's saying. So finally, we have something that we can disagree on. So makes it more interesting. So yes, grants are important for R&D, and so like when we look at the ecosystem here today. So I live in the UAE, I live in Dubai. A lot of the talent is actually, a lot of the IP is actually funded by the US or Europe, and those people are coming here building businesses, and so that clearly needs to change. But I actually disagree that the other grant money that's getting into incubation or whatever is not is being misused. I have conversations with like a dozen founders a day, right? A lot of them are building real businesses that are solving real problems, and I say no to them. And I say no to them because they're not tech scalable sort of venture capital backed businesses, but they're building real businesses. And a lot of these things are coming from or facilitated by these grant-based sort of programs. I actually think that it's actually healthy for an ecosystem to have. So not everything is tech, right? So like, I mean, I'll tell you, like, I can tell you every single one of my LPs did not make money in tech. Every single one of my LPs has made money in a, at best tech-enabled, but mostly, real economy businesses. So I think that it's actually very healthy to have a lot of grant money flowing into the ecosystem to teach entrepreneurship, to get people to create that culture of entrepreneurship that Sara was talking about, and create that culture of failure, which I think, I don't see it as wasted money. I think of it as an investment in changing the culture and building a culture of entrepreneurship. So I think that actually, I guess the long and the short of what I'm saying is, I think it's super important to still fuel that. So yes, there's grant R&D sort of grant focused stuff, but to me, it's important to not switch off that other tap, because without that tap, you won't have. And also, by the way, just one last point, and I'm going to pass over to Ibrahim. But a lot of tech-enabled businesses, are that's their first taste in entrepreneurship, and then they. So I used to run a venture studio before, and what we found was this venture studio was building tech-enabled businesses, and then they realized that the problem was in their business model. So they created a good business, a good cash flow business, but it wasn't growing and scaling. And so then these people then went off and built a second business, and then they learned how to scale, and so they built a pure technology play. And so, I just feel that, all of that, I'm a greedy capitalist, of course, I'm a venture, right? But I think that it's healthy to have capital flowing into all parts of the entrepreneurial ecosystem, not just like, I don't hold, as a venture capitalist, I don't own innovation. That innovation exists everywhere. It's just that I hold a small piece of that, which is scalable, of course, and hopefully makes me a lot of money. Sorry, I rambled there, but Ibrahim.
This is a good point. So let me move on to Ibrahim and basically rephrase what you said, Ashar, because what you're saying is that venture capitalists are in the business of building scalable startup, right? So you may look at a lot
capital efficient, basically.
and they are niche, and particularly ones that are addressing a very big problem, but in a very local market. And you can say that this is, there's probably like a very localized problem in Qatar, regarding its geography and things like that doesn't exist anywhere else, and it's very difficult to scale. But it's still an important problem to solve, and you can still build a nice business on it. So your question is, who can support the people that are building technologies to address this problem? And you think that the role of government is important there. So Ibrahim, I think in Cubic you do some of that stuff, right?
Yes. Now I think there are two types of grants, Doctor, like both Shehab and Asher were mentioning. And the first, I think we're all agreeing, which is the R&D. And I think government should continue to support R&D because you never know what will come out of it. What I think governments should try to be more efficient in is try to start seeing the linkage between R&D and IPs and commercialization early on, because the earlier you try to guide your investment and your support of R&D towards potential real solutions that are executable, the better, or the higher the chance of getting something out of the funnel at the other end. Now, when it comes to incubation, I have an interesting way of thinking of it, because when QDB runs an incubator like Cubic and we give you money, even if I call it pre-seed or I call it capital, it's as close to grant as it gets. So the way I look at it is what entrepreneurs need at this stage incubation is capital. Now, be it you're gonna call it a grant or you're gonna take 2% against it, is just something that differs from one sector to another, differs from one economy to another, differs from one culture to another. Now at Qatar specifically, it was a grant for quite some time, what we give through our incubation programs. And we have now changed it. So now there are some smaller grants that go to startups, but once you are pre-incubation, but once you are in an incubation program, you give away 2% or a very small percentage against the capital that you receive. At the end of the day, what we are trying to achieve there is we want them to feel that they're given something away against this capital they're getting. We believe it's becoming more efficient to increase the likelihood of entrepreneurs, because at this stage, and from government lenses especially, I'm not a private incubator. If you're a private incubator, you have different selection criteria. They have to prove themselves. So I have one of two ways. I either raise the bar and end up rejecting more people, or I lower the bar a little bit, but try to come up with a way to incentivize or to push them, challenge them. And that's where we decided to have a split between smaller grants that come at pre-incubation when you are just trying to think about what to do. And we do competitions, we give awards, financial awards or grants also. And then once you are ready for incubation, you actually have to start building a business and you give away some small percentage for the cash you receive at this stage. So it's not one size fits all. I don't think this works. I don't know that this works everywhere else, but today we believe this is helping us better and guiding the startups.
If I can add to Ibrahim, so I share the same view, because when we did Egypt Venture and did our incubator program under Falak, in the beginning it was grant-based. There was not really this confidence in terms of how serious they will take this and so on. And we changed the model to 4%. And here the 4% and going into giving them the financial resources, giving them all the support, we saw much more effective than going purely with grants. Because I think there has to be a cost in one way or another. And for us, it was also a sustainability gain, because even if I go into 100 of these startups and I have 4% and some of them return some of the money, I'm able to support next year 200 companies and so on. So it's more like a revolving mechanism through creating this sustainability.
Sara, let me get this question to you in a different format, because you represent Doha Tech Angels, which is arguably the sort of usually the first checks that go to any tech startup in Doha. But I would expect that any startup that expects to get a check from you should already have their product be in the market, so as a test of validation. So that means you look into government to be able to cover some of the sort of technology development risks or eliminate some of the technology development risks so that you can see more interesting companies with solid tech going into the market.
Yes. So first thing I'm going to say is that my views that were shared initially in this conversation are my own and don't represent any of the institutions that I'm related to. But of course, now we're talking about Doha Tech Angel. So yes, obviously, so DTA is one of the few privately led early stage tech investor. And so in one end, there's a very big need for more privately led, for more to be done. And I feel like DTA should be doing more, should be supporting more. But on the other end, it's difficult because the criteria to invest is different and because the risk appetite is different. So the risk appetite of our LP base is based on our partners, is having a company that's a product in the market and being able to assess quickly within the traction that they have, whether it's revenue generation or usage, that there is a demand for this product, that there you have product market fit. And that's the stage at which we enter. So obviously, for them to get to that stage, they need to be either the companies need to have bootstrap. I can't find the word. Bootstrap. So they have to have already funded themselves or gone to one of the accelerators from QDB or the other institutions around, or QSTP, etc. So yes, we do rely on other investors or on companies that are able to, with little capital, prove a specific value proposition without having raised external funding. So that's the point about that. And then can I relate to the topic that was before? Okay, so about the role for grants, I think grants is a very strategic decision. And as Mr. Ibrahim was mentioning, governments have a different agenda. And so when they're deciding to give a grant, it can be for a sector that is strategically important, that relates to security or things like that, or it can be just because of the impact of a specific sector, because it might create a lot of job employment opportunities, etc. So I think that grants should be used strategically by government institutions, and after they've done a specific analysis on the impact of that sector or these specific technologies. Whereas for the rest, I mostly agreed that other instruments, financing instruments, might be more productive for the startups. And the last thing I wanted to say is two things. One was when we talked about creating winners, Shehab, you were talking about the importance of creating winners and creating sustainable winners, but that takes time. So it takes decades. We're not going to be creating local winners or regional winners quickly. And even if we have created a few, that doesn't mean that they're going to start pouring out. So I also feel like it's a long-term view. We need to think that there's going to be failures. We're going to be supporting or the wrong type of players, and then eventually it will come through. And it takes time for the private sector to really believe in this asset class and to follow. It does take time. So there needs to be a long-term view. And the final thing I wanted to say was the role of government in responsible investing. So that's something that we haven't really seen yet in our part of the world, and I think that we should start looking for it. And what I mean by that is government that are supporting purpose-driven startups and really leading the way in that, and asking for KPIs that are not necessarily related to financials and things like that. And so I think that Europe has led the way, and we should look at that as a great example.
I want to just add, sorry, Maher, I was just, I want to add, like, I
want to take a couple of questions from the audience before.
Yeah. Okay. So I'll be quick then. I just want to say, I do think that, there's a misconception around, accelerators and what the function of an accelerator is. If you think about an accelerator, actually, an accelerator is a very inefficient ecosystem development tool, because if you think about it, it is a lot of people go through it, and then very few people actually succeed and prosper. But the reason why you do it is because what you're trying to do is create a funnel. And so a funnel of what? It's a talent development program. That is what it is. And so I think it is a big mistake to think that, we're not going to provide grants or we're not going to develop talent, because actually the more talent you develop, the more the greater the funnel, and then the greater the possibility of companies coming in that might be interesting. And then if you want to create the probability of success, you kind of need to do that. And the second thing, one of the things that Sara said is that it takes time. And I think this is super important. Is like, I think the problem is that there's this grant, and the grant-based system is short-term. And you cannot measure a grant-based system in a short-term environment. You basically need to, it's like being a parent, right? I accept that I will fail as a parent, as a father, right? But that doesn't mean I'm going to stop being a parent, right? And if I hopefully accept failure and continue to do what I'm doing systematically, at some point, hopefully, I will produce one or two, good human beings.
So thank you, Asher. I'm gonna take a couple, 2 or 3 questions, and I want just a volunteer to address the question. Then if somebody wants to follow up as well. So one thing that is just a piggyback on the conversation we've had. It's a good question about somebody who is at the university of, in this case, Hamad bin Khalifa University. They have a good technology related to biosensors for biomedical application, and they wanna, build a global company out of that from the region. What are, can you see the steps in your mind? How do I build a biotech, biosensor company from the Middle East, in this case from Qatar, to become a global competitor in Western markets? What are the steps? Feel free to jump in.
Shehab's on mute. I think maybe Shehab, were you speaking or okay. Maybe I'll just start. So Qatar has some great building blocks for to start that off, right? What you have done is invested in excellent educational institutions and research institutions. So that's great, and I think that's kind of why I was harping on so much about the talent development grant stuff, because you can invest a lot of time and effort and resources into building the institutions, but and providing them with resources. But if you don't have that entrepreneurial culture, then you may create some IP, but that IP will eventually ultimately be commercialized by somebody else somewhere else. And so I think, to me, it goes hand in hand. So, but I guess if I think about what could happen today, I think if I'm looking at, for example, I've seen a couple of things come out of the research in Qatar and a bunch of things in KAUST. What I'm seeing work, which is kind of interesting, is when I see cross-pollination of talent. So I'm seeing, like a Mexican PhD student or Indian, research student that is partnering up with somebody from the region and doing research, and then that research is getting a lot of grant funding, but also it's getting a lot of talent development money for them to learn about entrepreneurship and all of that, and then you get to start to see something like that. But it's interesting. It takes time. It takes a lot of time. If you ask me where I see most of this deep tech stuff, it's actually out of Egypt, and it's amazing, right? Because the resources, there's a lot of talent there. The resources they have are limited, resource constrained, but these guys hustle and figure out ways to get grant money from like Boston or whatever, and they make it happen. And I guess the point that I'm making there is that, Egypt is kind of unique in the sense that there's a huge amount of, it's like volume of talent and depth of talent. So like, because they have such volume, and I guess that's kind of where I go back to my point, which is if you don't develop the long tail talent, then you're not going to start, even if you invest in the IP, you're not going to be the ultimate winner. And this happens in the US. This happens on the East Coast versus West Coast. It happens everywhere. So, building institutions and investing in them is not enough. It requires what Sara was saying earlier, a culture of failure and a culture of experimentation. I'm not sure I answered quickly, but I thought I'd start before the experts come in.
But you left some room to other speakers to chime in, I guess. Anyone else want to jump in? Biotech company, like coming, great science technology from a university, and, want some visibility into the steps on how to build a global company out of that. So I think we talked about potentially a grant for a small business, a incubation. Shehab, Ibrahim, Sara.
I think it's one of two things, Dr. Maher. You either have something very unique and that's based on a lot of R&D, and that immediately puts you on the map. And then what you need to look at is an early adopter or an early supporter. Then you set in Qatar, Saudi, Egypt, depending on where you find early supporters, but your aim should be on building something that's deep tech, that is based on R&D, that can put me on the map once I solve for this. And a lot of support has to come, as Asher was mentioning. Now, the second is, if you're not a deep tech company and you still want to build something that's competitive, I think my immediate advice would be, whether you're building this in Saudi, Qatar, UAE, or Egypt, you need to think of something that works for the country you're in, as well as multiple neighboring countries, because odds are, before you grow internationally, you have to grow regionally. And as I think Shehab said when we started this, though he sits in the biggest market, I think, compared to all of us, Egypt, that each country alone in the Middle East is not big enough to be an only destination market. Then if you're not building something that is deep tech, that makes you internationally unique, you need to be at least unique in the region. You need to be competitive in the region. And day one, when you're building this in Saudi, you need to be thinking of, when will I go to Egypt, Jordan, Qatar, UAE, and neighboring countries, and make sure that you're relevant.
Thank you. Okay, let me take one more question before we ask you guys to prepare a very short closing remarks, because we're running out of time. It's a very interesting question. Do you have any success stories of LP investors who invest in VCs in the region, but they are from outside the region? And I think the question, it wasn't meant to include sort of the typical suspect, the European, development funds or anything like that. But has the region been able to attract LPs to invest in funds from endowments, from pension funds, from outside the region, whether it's from Asia or Europe or the US? And if not, I'll tell you something.
Was the question that region? Sorry, I think I lost a bit of
regional VCs, whether it's UAE, Egypt, Saudi Arabia, attracting LPs from Asia, Europe, or the US that are not the development banks, European development banks.
Private capital, you mean?
Capital. Yes.
So we've seen. So in my previous life, we've seen private capital coming from Asia, and actually, so we're seeing private capital coming from Europe and US into the region. Ultimately, that private capital comes because they think that there's a market opportunity. So yes, we're starting to see that today, but I think it will take time, because the ecosystem just too early, too immature. Most people are on, like the most experienced fund or a firm in the region is maybe fund 3, so like it's super, super early. So I think it will take time, but this region is interesting, and it is on a lot of people's radar in a way that it wasn't previously. And sorry, I just want to say one thing about like the previous question a little bit. It's just that I sit on the board of a health sciences fund, actually the oldest one in Switzerland. And what's interesting is that a lot of the portfolio companies of these Swiss startups, they're actually interested in coming to the region. So, I think there is an opportunity for local players, because those guys want to come to the region, not necessarily only from a market opportunity perspective, but because of the data perspective. They believe that like in order for you to have efficacy in drug development or solutions, you need to have a good view. And now they're getting better on gender, male versus female. But what they're not very good at is, understanding different ethnicities. And so if you're going to create solutions, and so I think, to answer your earlier question, I think there's a massive opportunity in the region from the biotech space to create that from a because you can basically train your models and create solutions that are for the local. So I guess what I'm trying to say is there are opportunities here, and LPs in Asia, in Europe, and US are starting to wake up and see that as well. So I guess I'm just wrapping up.
You want to add anything to that? Are there foreign LPs and Egyptian VCs?
And I've heard of I know of Open Society, but it's an endowment fund, so it's a philanthropic fund, but it is a private fund, privately capital. So Open Society is the fund from George Soros, the foundation of George Soros. They've invested in funds in the Middle East.
Our usual suspects here, Maher, are the development financial institutions, the local banks, regional banks, family offices. We did not yet see, and I agree with Asher, it's most are in Fund 2 and 3, and we still need time and to show real track record in terms of realized gains to attract these new players into the market.
I think that's probably one KPI that will be good to measure our success as a regional VCs towards. And what I'd like to do now is I'd like to ask each of you, you started with an opening statement. So I'm gonna give you maybe 30 seconds or so to amend, modify, add anything to your initial insight that you have come up with through this discussion. And I would like to remind our audience to, I guess there is a Q code here that you can go to and fill out a survey to let us know what we did right and what we did wrong in this webinar. So how about I'll start with you, Ibrahim.
Thank you, Dr. Maher. I don't think I will take away or add to my opening remark, but I think I will just summarize it by saying that based on all what we discussed, it takes an ecosystem to build an ecosystem. It's not government alone, it's not private sector alone, it's not family businesses. It's all of us, and we all have to work together in order to achieve it. And again, as we started, government has to intervene only when required. They should typically be enablers and directly intervene only when required, and be careful.
Thank you, Ibrahim. Sara, you want to go next?
I don't have much to add. I think that all the points were said. I think just to reiterate the first point I made at the very beginning, I think that we got used to with the past crisis, especially after 2008, to see governments come in as lenders of last resorts to come save the day when things go wrong. And I think that there's a big role to play in having them being, and seeing them as funders of first resorts that come and that pave the way and that create things, as opposed to coming just to the end to save them. So I think that but as Mr. Ibrahim said, there are ways and specific roles and limitations as to what they should and what they should not be doing. But there's definitely more to be done in that aspect.
Thank you, Sara. Shehab? You're on mute. Okay, you're still on mute. Maybe. Yeah, go ahead.
Sorry. Okay. So I think the core element for me is to act as, for the government, is to act as a catalyst, as an enabler. I think in summary, as we all said, early stage, very early on to come on. But afterwards, I think the core element we have seen now when we went into these deals at the time I was at the government was to learn from the issues these startups are facing, and then to work on the regulatory environment and the elements which can resolve a lot of issues. And that's the core element where the role of government comes in. Especially in the fintech space, we have learned a lot what we have passed to the central bank, to the financial regulatory authority, and so on, which made things much easier for these startups to grow and flourish. And the last thing is, I agree with Ibrahim and everyone, we have to do like the regional game for our startups to grow, because our markets are so tiny. Just was looking into numbers that the Detroit number is much bigger than some of our markets collectively together. So we need to create some regional players from this perspective.
Thank you, Shehab. Asher, you have the final words.
Oh, wow. Heavy burden there. So I guess what I would say is, I guess if you want to build an ecosystem where others want to invest in, then I think what I would say is continue to do, the regional governments need to continue to do what they're doing to support the ecosystem. They need to, instead of slowing down, they actually need to accelerate And if they continue to deploy capital and to support the ecosystem, and then on top of it, continue to build the systems and institutions and the infrastructure that you need to develop a healthy ecosystem, then I think we will start to see, like positive outcomes and success stories where everyone is looking at the region to invest in the region. But that also needs time. It takes time. So I guess, to me, it's like there needs to be a consistent approach. One of the benefits that we have in the region is that we have longer planning cycle. We have the luxury of having longer planning cycles. The decision makers that you see in Europe or whatever have very short-term, or US, very short-term planning cycles, because they're only thinking about how do I get reelected. Here, we have the luxury of taking a much longer planning cycle. And I think if we do that, we can take a 10, 15, 20-year horizon, and then we can just continue to implement and execute on the ecosystem building activities. To me, that's super important. The fact is, we've only started this journey. It's only just begun a couple of years ago. And look at the impact that you've had today. So imagine if we were to have this continued progress from government consistently over the next couple of years. I think it's just, I guess my last takeaway would be, this is still, to me, the most exciting time to be a VC in the MENA region. So thank you. And thank you for having me.
Thank you. Well, on these positive notes, I cannot thank you guys enough for being part of this wonderful panel today. I've thoroughly enjoyed the discussion, and I'd like to thank our participants and audience. I think we took a little bit longer time than we should have, and I appreciate your patience. And please join the next webinar for QRDI, and I look forward to seeing you all. Cheers. Bye-bye.